conference organizers, and they can assist you with that. So before I introduce the panelists, I wanted to provide you all with some background info just for context setting that I think will be important for this discussion. So in 2018, the highest earning 20% of families made more than half of all US income, more than the lower 4/5 combined. Between 2000 and 2018, white wages grew more than 4 times as fast as Black wages across most of the wage distribution. In 2016, the median net worth of non-Hispanic white households was $143,000. The median net worth of Black households was $12,920. I'm gonna repeat that one more time because I think that's extremely important. In 2016, the median net worth of non-Hispanic white households was $143,000. And for Blacks, it was $12,000. Now, economic inequality and discrimination exist in housing and mortgage lending, predatory lending, and overall inequities in how higher education is financed. And this has created a huge disparity in wealth between Black and white families. For decades, federal policies promoted community segregation explicitly through laws and implicitly through inaction that created and sustained low Black home ownership rates and segregated residential communities. Since 2004, home ownership between Black and whites have continued to widen, with 41% of Black households who own their homes, compared with nearly 72% for whites. In April 2020, the Black unemployment rate was nearly 17%. And we know how COVID has played a huge role in the inequities we're seeing both in health and also in the economy. In 2018, the median weekly earnings for full-time workers was $694 for Black Americans, $680 for Hispanics, compared to $916 for white Americans. A study using the Federal Reserve's most recent report on consumer finances has found that Black families in the US hold just 1% of the wealth that white families have. That is just 1%, literally a penny on the dollar. Student loans have also rapidly increased debt amongst Black households. According to the National Center for Education Statistics, roughly 87% of Black students borrow federal loans for 4-year public colleges, as opposed to nearly 60% of their white peers. On top of this, those Black students are more than 2 times as likely to default on their loans in 12 years. Now, when we look at the business sector, Black professionals still account for less than 2% of all roles across the asset management industry. To add to this, diverse owned firms, meaning firms that are led by women and other minorities such as Black, Hispanics, et cetera, represent just 1.3% of the 69 trillion in assets under management globally. And to end, the balance sheets of the nation's 4,700 banks are made up of 20.3 trillion of assets, but only 20 of these banks are Black owned or led. And they have total assets of just 5 billion, less than 1% of America's commercial banking assets. And we know that Blacks make up 13% of the population in the United States. So this just all goes to show that so much needs to be done to actively dismantle anti-Black business practices and models that bring us to the discussion about finances today. I am so happy to be joined by 2 wonderful panelists, Bilal Afolabi, financial advisor at Northwestern Mutual, and Chellis Allen, founder and CEO at Eveready Consulting. So thank you both for being here. I wanted to kick off by discussing the history of Black economic freedom in America. Bilal, can you touch on what policies, practices were in place that we should acknowledge today as reasons why economic equity has not yet been achieved? And then with that history in mind, what are some barriers that still exist today, be it political barriers, health, et cetera, that limit the Black community's access to financial freedom?
Fanta, thank you so much for that. Thank you. Thank you for the intro. Am I echoing? I'm okay. Okay, sorry about that. Yeah, thank you for that intro. Those statistics were very alarming. So, wow, that was very eye-opening. I understand the population, but as you went deeper and you gave off all those examples, it brings to light what we have to do today and the importance of it. If we take a step back into history, a lot of stuff stemmed from, obviously, slavery, but post-slavery, start thinking about the Jim Crow laws and segregation. When it came down to segregation, it came down to schools, residential areas, jails, even our cemeteries were segregated. In my research, while I was going through school to learn more about financial planning and financial education, one of the fun facts that I discovered was Oklahoma. Oklahoma was the first state to segregate phone booths. So as you start thinking about that, what came out of Oklahoma, as we're all very familiar with, was Tulsa, Black Wall Street. And that's when we start to get a glimpse of segregation and how this thing could potentially be beneficial for Black individuals. We had thriving businesses, things were going well for us on our own. For us, by us, was literally happening in Tulsa, Oklahoma, under Black Wall Street, which was then burned down. And then you start thinking about other things that were happening, such as redlining, where the federal government literally took out a map and started lining around neighborhoods that were really concentrated with Black individuals, and they banned them from getting access to loans to be able to purchase homes. Now, I don't know about you guys, but if you're looking at an average home in the state of Connecticut around 200,000 or 250, I don't have $200,000 lying around to put on a house and buy it cash. So as you start thinking about real estate as an avenue to build wealth, that's a huge way to get in. But if you don't have access to the capital, there's no way for you to do that. So that led us to today, where one of the statistics you mentioned was 60% of whites own their home. You compare that to 20% of Blacks that do. That's a huge gap. The net worth average that you mentioned was $12,000 compared to $144,000. If you purchase a home and you took out a 30-year fixed mortgage, in 30 years you pay the home off. If the home was worth just $150, one home from one generation to the next already brought us up to the average. But you think about something that started in the 30s and almost 100 years later, we're still facing some of that stuff today. So today, what's happening, some of the barriers to entry and things that we're facing is I'm going to take a different approach at it and start thinking about our health. It's hard to talk about wealth without mentioning our health.
Absolutely.
The average life expectancy in the US for the white individuals are 79. You compare that to the Black counterparts is 75. Those 4 to 5 years is a huge difference maker. You can think about that a lot closer. Think about a 22-year-old, a 27-year-old, 5 years out of college, compared to that 27-year-old that makes all the way 32. You're 32 versus 27, you've just been working a little bit longer. So by default, you just made a little bit more money. Now, obviously making money is one part of it, and Chellis is here to tell us it's not necessarily what you make is what you keep. So that part is also important. But I want to make sure I bring up the health because that's also important. And later we'll start talking about the difference between income and wealth, and I think that'll be a great transition. But in America today, we have 113 million individuals over 50. That 113 million, so a third of our population that's over 50, controls 75% of the wealth. So if you think about it, if you're over 50 and you start talking about us young folks, really under 50, we don't have wealth. Our ability to get to wealth is going to come from our incomes. Some of the things we're facing today, we can speak about our criminal justice system. Our population is 13% in the US. However, Blacks account for 34% of the total population in the prison systems. It just doesn't add up. And if you are in the prison systems, that is removing you from your family. So there's you mentioned mental health, so the traumatic experience, that dual household income thing, forget about it because no one is working. So it's very difficult to now have a single parent that's going to raise their children on one income versus the counterpart that now has dual household income. Mental health, longevity, and just your health, it's going to make a huge difference. So as we keep talking about wealth and creating that wealth, I think we should start speaking on some of the incomes and things we can do today as us today to make sure that, hey, we keep more of our money to start creating some of that wealth.
So let's get into
hopefully that answers some of the questions.
Yeah, no, for sure. And I think that's a great segue into really talking about this income versus wealth. When we talk about economic, inequity, it could be measured through income or through wealth. But I think a lot of times we see that, income will be used for wealth will be used for income, but they're two completely different things. And to your point about health, if we just look at COVID right now, there are people who have wealth, and have been able to build that wealth. And when they lost their jobs, they lost their income, but because they have their wealth, they're good. They're able to sustain themselves for an extended period of time. But on the other hand, you have people who have no wealth or like no real wealth, and then they lost their job, there goes their income. Their income was what was used to pay for everything to sustain themselves. They don't have that. So Chellis, I would really love for us to kind of dig deeper into this income versus wealth conversation. Because we often hear about closing the wealth gap, but what about the income gap? So can you kind of talk about the difference between the two and why it's important to distinguish between the two and then address both equally? And then what you're saying of, you know, like it's not what you have, it's like what you keep. Can you kind of go into that?
Yes. So it's important to realize that you really can't have one without the other. You need to have some type of income flowing in. And that's why people encourage multiple streams of income, because those multiple streams of income is what helps you build the wealth. Now, when you think about wealth, you think about people's net worth and things like that. These are assets that they accumulated. And this is how people create generational wealth. With just a single stream of income, it's often harder. And that's what a lot of our people have, this labored single stream of income, for us to build that generational wealth and break these generational curses versus our counterparts. They've had these tools for years. They come from a lot of old money, whereas we know, we talked about the Black Wall Street and how we know what happened to the Black Wall Street. We see how they cut us off. So it's important for us to make sure we're, number one, acquiring these different streams of income. And with the income gap, we heard all the points you were talking about with the median household incomes and how Black people were just, you know, we're below our counterparts. We're below the white community. So we want to be able to close those gaps because it's important, because our work is just as great as somebody else's work. You know what I mean? We need to be paid for what we're providing, and we have to know our worth, and we have to go in there with those negotiations for that job or that position or whatever contract, you know, some people are self-employed, and be able to close that gap, because that's what's going to help give us that leverage in order to close the wealth gap. Because now once we have that income flowing in, we're able to save, we're able to invest, and we're able to get into taking back real estate and creating these assets that not only will help benefit us over time and during our lifetime, but we'll be able to pass it down to future generations. And now we're starting to see each family create that wealth and build that, and then we can close that wealth gap. Because right now we're unfortunately, we don't have the tools that other people had, and now we're scrambling to get there. But if we can start this movement and revolution now, I mean, we could be light years ahead. You know, we are seeing the power of the Black dollar. We're seeing the power of Black business. So this is something that we need to be getting into, you know, moving forward with.
Absolutely. And then Bilal, sitting, you know, where you sit as a financial advisor, like when you're speaking to people, how do you kind of talk about this income versus wealth conversation in order for them to like really fully understand what that all encompasses?
Yeah, so the wealth is created over time. It takes time to create wealth. And I'm not wealthy, and we have an acronym in our industry, and we call them Henrys. High earners, not rich yet. Right? So we're looking for Henrys. That's going to be the biggest difference maker, is finding those Henrys, because Henrys can now end up creating wealth. And the other thing we mentioned, we spoke about student loans. So I think us as a Black community, we should just have one big meeting. We get everyone together in like this huge auditorium, right? Maybe Tyler Perry Studios or something. I don't know. Right? And then we're all together, and we have to make a plan and strategize. We have passions in my culture, being Nigerian and growing up in our environment in Fanta. You probably get it, and your culture is probably the same way. We had barely any choices for what we wanted to do in life.
Yep.
It was pretty straightforward. You're going to be a doctor, you're going to be an engineer, or you're going to go into business. That's it. And then we come to the U.S. and it's like we're exposed to different things in life. And for me, some things I just want to have fun. So certain things I want to do for fun. But what I realized over time that my parents was instilling in me is that money is a tool. And that tool is going to allow you to do the things that you want to do. So as we start thinking about income and what the purpose of this huge meeting is going to be for, is, hey, let's be strategic. What jobs are paying us? And that's what we have to target. I think it's time we put a little pause on passion and love a little bit. And I think we always advertise that. Chase your goal, and that's perfect. And you could do that. But I think you can make money and still do that. If I wasn't a financial advisor, I'd be a social worker. I think it's the most rewarding thing in the world to care for people. But being a social worker, as an employee, it just doesn't give me enough income to do the other things that I want to do. So I think that meeting is going to say, hey, top 10 paying jobs. Let's list them out. This entire population from the state, that's what you guys are going to focus on. Once you get that and you get the money, then we can find different ways to monetize it and turn back around and assist our own people. Because we keep graduating at higher rates, but when we look below that, we pull the layer back, is what degrees are we graduating with?
And I think also I want to touch on your Henrys. You know, I think that is a great acronym. I will be using that, you know, sorry, Northwestern. But I also want to make sure that people are understanding, and I know that a lot of millennials are probably watching this. We don't want to be a Henry that, you know, if you're a Henry, that's great, but if you can't keep any of that in order to build the wealth, then you're going to be missing out. It sounds great to say I make $100,000 a year, but when you look in your bank account, you have no money to show, and you also have credit card debt. You know, we have to make sure that we're using money as the proper tool. We have to understand how to use credit. We have to understand how to use these things in order to come together and have that focus of where we're trying to build this Black wealth, or this next Black Wall Street, so to say. You know, I think that people get caught up in, like, yes, we want to make a lot of money, but I can make $60,000 and have more money in the bank or in assets than somebody who makes $100,000 if they don't know how to properly manage their money. And that's what a lot of it comes down to, is that we're told what our parents are told. And sometimes that's not much, especially if you're coming from a generation that came straight off the plantation during segregation and things like that. You might not know as much. And then thus you have those bad habits, and then it continues to trickle down even though you are a high earner. So I think that's important as well. And then speaking of, you know, all of us coming together, I think that as Black people, we can't be crabs in a barrel. We have to come together, collaborate, and have a focus, and then we can get to where we need to be. So I do think I like Bilal's idea of getting all of those people together, because if we could really do that, we'd be very powerful.
Yeah, and then we'll definitely, go ahead, Bilal.
Yeah, I just want to make a side comment, because I have a lot of close friends that are social workers, and that was not an offensive comment at all. So I don't offend anyone. Literally, I have some social worker clients that make hundreds of thousands of dollars a year.
You can.
And that is simply through starting a business. So that statement was simply, what jobs and roles could we get that could pay us more money? That was the purpose of that. So not to pick on any social worker. So just full disclaimer.
No, because, you know, we hear all the time, do what you love, you know what I mean? And that's great. Of course, we do want to do what we love, but we also want to make sure that we're handling our business on top of that. And we can't neglect finances, and because that's a, you know, you need that to survive. So, you know,
no, that's important. That's important. And I want to come back to that pause on passion, you know, a little towards the end, because I think we can talk more about that. And then also want to come back to money as a tool. And I think that we'll touch on that when we talk about finances. But before we do that, I just wanted to pause for a second. Once again, if anyone has any questions, feel free to add that to the Q&A box, because we definitely want to know if you have any questions. So just wanted to make sure that we hold space for you all. But one thing that I do want to do is I want to go back to the health, you know, point that Bilal, you brought up earlier, because I think it is very important that when we talk about income and wealth and finances, or when we talk about any topic, and like any topic that we're hearing today during Black Independence Day, it's very important that we include health, because health plays a huge part in that. And within the health landscape right now, you know, we're all in some shape or form impacted by the COVID-19 pandemic. So I really want to hear your thoughts on how has COVID worsened the situation for Black America, if it has, and then do you think we can recover?
Yeah, as a optimistic, yes, we're going to recover. I think it's going to take us months, if not years, to realize the real impact COVID has had on our communities. But it's the lack of access to healthcare. It is some of the occupations that we have. I mean, we all went through it. Do you know how difficult it was to get a haircut during COVID? It was impossible. And it came down to what jobs do we have. A lot of us are doing public transportation. My bus driver growing up was Black the entire time when I had to go to school. Now, as you think about jobs that are going to allow us to interact and touch more people, I think we're in more of those fields in terms of public transportation or hairdressers or just factory employees. We're going to come in contact with more people versus the individuals that have this corporate role where they may be a director at an insurance company or investment company. Everything just turned to Zoom. And now everyone's working from home with their shorts on and a dress shirt. And that was normal. But if you did not have those roles and you still had to get up and become an essential worker, which big shout out to everyone in healthcare. My entire family is basically in healthcare. My mom, everyone's in healthcare. So thank you so much for that. We need more physicians. Absolutely. We certainly need more physicians. But what I noticed is my mom, she's a CNA. That thing never stopped for her. She still had to get up and go and see people, which I got nervous every single day because she's being exposed to it. And the people that she's caring for are a lot older. So side note, I need to retire my mom so she doesn't have to do that. But it's some of that exposure that I think is going to take years for us to really realize the huge impact of it. But we did not have a strong infrastructure to begin with. So when it happened, it hit us a lot harder. You know, Chellis, anything else you'd like to add to that?
I was more so trying to dive into, you know, the unemployment levels right now, and how this unemployment for some, it depends on how you look at it. I think that we can recover. I think that we will recover, but I also think that we need to wake up and we have to do our part, which means that we all need to be educated on having our proper practices, because I know a lot of people that are on unemployment, and some of them are using this time to diligently save that money. But they're, you know, if everybody's on social media, there's these memes that are like, you know, we ain't seen those, as it called, Casa Azul bottles since unemployment stopped or whatever, like, because we're not spending the money in the right way. So that's setting us back on top of being on unemployment, or on top of maybe not even getting it, or just struggling to work the essential worker position. We're not putting away that money that we need to be putting away right now, because technically this is the beginning, or has been the beginning, of a recession. And I think people have kind of been blind to that because we're so focused on the health part. But this directly affects the monetary issues that we're having right now. So I just found that to be so interesting. And then especially with the unemployment, we know that there's been a package in the air. We don't know if they've approved our full second stimulus check. And, you know, people are counting on this. People are and people are counting on this. So I think that, you know, they say it gets worse before it gets better. So I think we're in the worsened state. But if we can pull out of this and we get a lot of different changes politically, and you know, once again, we come together and continue to educate one another and help each other, we'll be able to pull out of what we're in right now.
And then, you know, speaking of, you know, recovery and kind of getting out of the situation, whether it's COVID or just looking at, you know, economic equity as a whole, I want to jump into the topic about financial literacy, because we tend to hear that term thrown out a lot. We tend to hear that term as the end-all be-all solution to economic equity, when it's not. It's just a small part of it. Well, like, not even small. It is an important part of it, but it's not the solution to it. So I really want to dig into that topic because we know that even with financial literacy, Black people still face barriers to economic equity. So can we talk about financial literacy, but then also can we talk about what are some other practical solutions to addressing economic equity and in essence, financial freedom?
So it's twofold. So it's a two-part question. So I kind of lead ahead and say, okay, there's some roles that investors and businesses could play in this, which is, we've seen it. Businesses are more successful with a diverse field force. Black power, we control $4 trillion of buying power. We impact culture. You put Black on anything, it's going to sell. We know that. So I think businesses and investors need to have a field force where they go and say, we are going to target and hire Black people. JP Morgan Chase is doing that right now with some of their initiatives. We are going to go hire 4,000 Black individuals. And they just say it, and they're blunt, and they're obvious about it, and they're targeting that. So big shout out to JP and other companies I see, they're doing that. The things that we can do from a solution perspective, I have a framework that I think we could follow. And there's really 3 parts to it. It is to simply protect, optimize, and grow. Protect, optimize, and grow. Protect, optimize, and grow. And when we think about funding, it's such a broad thing, but that's really it. There's only 3 parts to it. You have to protect, you have to optimize, and you have to grow. The protection piece, simply what we're focusing on here is to make sure that, hey, God forbid you got sick, injured, or hurt and couldn't work anymore. You had money coming in. God forbid COVID happened and you are unemployed and you're not working anymore, making sure that you're financially okay, making sure they take care of your family. God forbid you pass away, your spouse and your children could still be okay. That is protection.
And can we stop at
Optim-
protection and
yeah,
kind of dig into that while we're on the topic? Is that I know a lot of times, you know, one of the tools is life insurance for us to close that gap. We're going on Facebook too many times and seeing a GoFundMe page for somebody's funeral because we can't cover costs. And thus, we're not leaving any money for our families in order to cover bills or to even take care of themselves. A lot of families, especially in the white community, they take these large sums from their life insurance and they disperse them to their families, and they already give them that leg up. So little Timmy can have $100,000 from the time he's 18 because his great grandfather passed away and left that to him. So that is super important to not only protect yourself while you're here, but protect yourself when you're gone, because protecting yourself when you're gone protects your family and also gives that leverage for us to close that inequality in the economic gap. So continue. I just want to
perfect. I like that. To add to sprinkle a little culture to that, right? A little culture back. So I think Nipsey did a great job, right?
Yeah,
R.I.P. Nipsey.
did. Yep.
All right, $1
And
million
today's his
life
birthday.
insurance on my flesh, right? TMC.
Yep.
All right, $1 million life insurance on my flesh. When Nipsey died, we look at London. She bought another multi-million-dollar property a few months later. She continued everything. She continued the deals with Puma. He left a legacy behind at such a young age because he's thinking so far ahead.
Exactly.
But if you think about it, $1 million life insurance policy for anyone in their 20s is less than $50 a month. I think we have this mindset that it's something that's very, very expensive, and we're not exposed to when people don't talk to us enough about it. But that's a great point you bring up.
And also talking about the $50 a month is that a lot of times people wait until it's too late, or until you're like, you know, you're 50 and you got all these issues and all of a sudden I need this health insurance and it's this much a month. But it's like, if you would have started when you were in your 20s, like you mentioned, you would have accumulated it all this time. So that's very important to reiterate to people.
Absolutely. The last thing on life insurance, then we'll move on, is the best time to buy life insurance is when you're born.
Wow.
Because the way life insurance is priced is based on your age and your health. You will never be younger than when you're born. In your health, it's such an unknown that if you're in your 20s right now and you still don't have it, it's like, it's great, but it's a fool's game to say, I'm going to be in the same health I'm in now 10, 20 years later. There's no way to know that. Or even when you're born, we all want healthy children, but it's hard to say unequivocally, my daughter, my son is going to be as healthy as they are today in 20, 25, 30 years when they actually need it. So just purchase it. The younger you are, the healthier you are. You may not need it today, but down the line is going to be part of your plan. So just get it out of the way.
I'm so glad that you mentioned life insurance. Like, I'm so glad that you brought that up, because I think that's so important, and we don't talk about it. Like, I think this is one of, I don't know how many conversations where you're talking about finances, and I think this is one of the only ones where I feel like life insurance has been brought up, and that's extremely important. So just want to thank you for just bringing that up. Sorry.
That's wealth, right? We think about income and wealth. Wealth is assets that get passed on. The easiest way to create $1 million estate today is about $1 million life insurance policy. And it's all tax free. Real estate is great, business is great, all that stuff is great. You don't.
And you can start small. Like, you know, I started working with Bilal. For those who don't know, you know, we didn't really touch on what we do, but he's my financial advisor, and we started small. And, you know, we keep building up, you know, because as you get older, we talk about that you're supposed to be making more money and accumulating more. So now I can up that policy, and hopefully, you know, by the time I'm in my 30s, we got that $1 million policy. You just have to start somewhere. Don't be intimidated is my point. People get intimidated when it comes to money, life insurance, all these different policies. It's not as complicated as you think. You just have to start somewhere.
Absolutely.
$10 a month. $10 a month. Optimization. Optimization is debt repayment. A lot of people have it. You're in college, you graduate, you might have some student loans. You got out of college, you say, hell, I need a fancy little car. You buy a car. It's, you know what? Everyone's going to Miami.
That credit
girl
card
trip to Vegas. Swipe, I don't want to miss out, right? I got to live a little bit, right? So you just find yourself ending up in some type of debt. Now that you're here, it's okay. Life happens. It's how do we get out of it? And there's only 2 ways to really do it. I'm sure there's more ways, but to simplify it, protect, optimize, and grow. Optimize, debt repayment, there's 2 folds. You have the avalanche strategy, and they have the snowball strategy. The snowball strategy tells you, hey, list all of your debt out, smallest balance first, and you tackle it. The avalanche says, hey, list out all of your debt and you focus on the highest interest rate first. The pro of the avalanche is you pay off the highest interest rate first. So long term, you end up paying the least amount of interest. However, what we find over time is 90% of the time we're human. Snowball actually ends up winning. Just because it's a win that you get under your belt that motivates you to keep going. And this is more budget babe like area. So I'm gonna stop talking. Just let her just tell you guys more of what you should be doing on the optimization part.
So I know a lot of times when it comes to debt repayment or just handling money that's in the account, people often have like 2 accounts. They like, I have 1 checking, 1 savings. That's terrible. It makes me like so sad just because all that money into 1 lump sum makes it harder for them to figure out where it needs to be dispersed to. If you do have any type of debt, such as a student loan, such as your car note, and even credit card debt, I have 3 separate accounts that I would put money into in order for me to see, okay, this is how much I have allotted for my credit cards. This is how much I have allotted for my student loans. This is how much I have here, and have the money separate from what I can actually spend. Because people start to dig themselves in a deeper hole. It's like, you know, I have clients, they start to do the avalanche or the snowball, and something comes up, or they oh, I thought I had all this money in this one account, and, you know, now I have to start over. If you start to get yourself disciplined enough and separate that money, it'll be easier to keep paying back, and you won't even miss it because it becomes like a bill, and then before you know it, you get rid of it. So it just takes time, and it takes a lot of discipline. Discipline is the key word. You can hear about all these strategies, but you really have to be the one to just do the work.
Okay.
No,
and then the last part would be the growth part. So we have protect, which is, hey, if I get sick, injured, or hurt, and I can't work anymore, my financial plan still works. It's, God forbid I pass away, my family is taken care of. God forbid I lost my job, I still have enough money coming in. If I get furloughed, it doesn't matter. You are protected. So having an adequate emergency savings, a supplemental disability insurance policy, and a life insurance policy. Emergency savings, Chellis, how much money should they have in the emergency savings?
So it should be minimum 3 months worth of your, like 3 months worth of expenses. So like your rent, your car note, student loans, add all that together. And then you'll see how much you need per month, times 3. That's how much you should have minimum in your account. And even if you want to take it lower than that, because I know that can be scary. Some people have, I have a rent, I understand, you know, light bills and things like that. At least $1,000 you have to build up to, because anything starts to happen and it goes back to getting in that debt. You pop a tire, you need a tire. You're going to have to dig into, if you don't have any savings, where's that money coming from if it's not in your checking? So that's really important to start to build. And I also wanted to touch on something else Bilal had talked about. We're talking about the growth part. I think that we get caught up in, number one, the main thing we know about is a 401k. We have to realize there's more avenues to wealth than just building a 401k, because a 401k is as risky as stocks, and it's not guaranteed. And sometimes the business won't match you. And you can talk to your financial planner and get those avenues of investing, so to speak, as well, because I have a Roth IRA, so I'm able to move around, put any type of money in there post-tax. So when I take that money out, there's no taxes being taken out, and I got that through my financial advisor as well with Bilal. So it's just getting into those avenues to make sure you have that growth.
Yep. So the growth part, just to simplify it, if you have a job and you're working at a corporation, you name it, JP, Goldman Sachs, UTC, Raytheon, Cigna, Aetna, it doesn't matter. If they offer you a retirement plan of 401k, well, I'll take a step back. Anything that starts with a 4 means you get it through your employer. So if you don't have a 401k, you may have a 403b. If you don't have a 403b, you may have a 457. But simple way to think about it: 4, I work for somebody. That's it. And if they offer you what's known as a match, and a match, to simplify it, you make $100,000 a year, just for math sakes. You put away 3%, so that's $3,000. They can say, hey, we'll match you dollar for dollar up to 3%. So now you put $3,000 to this 401k, 403b, 457. They'll turn around and also put $3,000 into it. So now you have $6,000 in your retirement account. Here's what people mess up. Now, let's say you decide, hey, I only put 1% in. Well, you just left $2,000 on the table. Make sure you do whatever the match is. So the first step, what is the match at my employer? Do I have a 401k? Then they have these things now. It's a lot more popular now. It's what's known as a Roth 401k. ROTH, Roth 401k. So general advice, I can't, as a fiduciary, I can't give out specific advice, but general advice to the population. Here's what I suggest most people could consider. Roth 401k up to whatever the match is through your employer. So here's a quick example. I had a client at Cigna putting away 10% to their retirement plan, their 401k. The match at their employer is 6%, but they're doing 10% because they should save more than just a 6 into a traditional 401k. Here's what we did. We dropped the contribution from 10 down to 6. So now it goes to the Roth 401k. They still get the full 6% match from their employer Cigna. That extra 4%, we took that and we put it to a Roth IRA. So now in this example, clients are still saving 10%, but the way we bifurcate it made their plan way more strategic, because now when they retire, they can take the money out on a tax-free basis, which was Chellis' point. So the difference between the 401k and the Roth IRA, because question that people might start thinking is, why don't I just put all 10% to the Roth 401k? The reason why is because the 401k is limited. The Roth IRA is very unique, where you're able to take out your contributions, whatever you put into it, out of the account prior to age 59 and a half, as long as you have for 5 years, without any tax or penalty. So say, how do we save the same 10%? But who knows, you might be in your 30s or 40s or 50s and you may need money. I don't know, but I want to give you the option. Hey, if I need money, I could take the money out of my Roth IRA, whatever you put in, without any tax or penalty. But if that full 10% was in the 401k, and now you're in your 30s, 40s, 50s, and you have to take it out, then you're going to pay taxes. And assuming you're in a 22% tax bracket, making over $80,000 a year, and you get a 10% penalty on it, now you're paying 32% to take out your own money. I have yet to see a credit card charging you 32%.
Right.
So please don't take money out of your retirement account. 10%, 6 match Roth 401k, 4% Roth IRA. That's it for growth. We have protect, optimize, and grow. And I'm going to pause.
That's amazing. And I think in the interest of time, we'll just finish with one question. But I don't know about y'all, but I think that I need to replace my financial advisor with Bilal, because all of that was just well said, like, amazing. But just to kind of end, and I like to always end on like actions that we can take, and you kind of, both of you touched on, you know, things that we can do specifically, whether it's saving for retirement, whatever it is. But I want this call to action in like two forms. So what we've been seeing, and I think Bilal, you touched on this earlier, is like businesses and investors are also kind of stepping up to our call to action to, you know, help in any way, shape, or form the Black community, especially due to the racial tensions that we've been seeing over the past few months. So on the one end, what I want from you is, one, a call to action that you have to some of these businesses and investors. We've seen, you know, these businesses, for example, Apple launching a $100 million initiative to promote racial equity, Goldman Sachs deploying capital to communities, Reddit co-founder, he stepped down in order to urge for them to hire a Black candidate, and then even makeup retailer Sephora said that it will devote at least 50% of its shelf space to Black-owned products. So we're seeing, you know, business and investors step up. Obviously, we want this to be sustained and not just a point-in-time action. So on the one end, what is one action that you have for investors and for businesses to help us reach economic equity? And then for people on the call right now, what is one call to action that you have for them that they can do right now in order to reach financial freedom for themselves or for their entire community?
Yeah, so my first advice to the corporations is we have diversity. And the last part that people forget about that is an inclusion. Right? You're going to get us there. The reason why I stayed at Northwestern Mutual is because I felt included. So you have all these initiatives, but now once you have your people here with these organizations, and we're brilliant people, once you have these brilliant minds at your organization, make us feel included. Have resources, additional resources for us. And I'm sorry, it shouldn't be equal because, well, life wasn't equal for us anyway. So you have to give us more. You have to overcompensate. So pour more into us. Help us tap in the younger generation to the older individuals quicker. Have that recent grad connect with that executive that looks just like them, so now they see a vision for the future. So my biggest advice to those organizations, you're doing a phenomenal job with the marketing. Get those people in there with the diversity, but make sure that once they are there, they also feel included.
Yep.
So spend some efforts on that too. And then for the personal side, what I've done for me, and if you want to live a financially free life, pay yourself first. If you want to live a financially free life, pay yourself first. So call to action, do a budget today or tomorrow. Figure out how much is coming in, how much is leaving. If you don't have a surplus, don't feel bad. It's okay. Just figure out what you have to cut back. Talk to Chellis. She's going to help you figure that out. I literally send clients to her all the time that told me, I don't have money to do your financial plan. I was like, great, go talk to Chellis. And they'll come back to me 3 to 6 months. They're like, oh, I have money. I'm like, well, you're making the same amount. It's like, I know, but you have money now. All right. She's going to help you find the money. All right. She's going to help you find the money. So once you figure out if you do have a surplus, automatic deposit money into an account. And thank you, Chellis, for all the stuff you give me. But really, we just make things very, very simple and just follow them.
Yeah.
We have our clients directly deposit money from their paycheck into their financial planning account. So just set up one account that all of your money goes into for your financial plan. So therefore, that one account is going to protect, is going to optimize, and is going to grow. It's call it action. Do your budget. If you have a surplus, great. Set up an account, direct deposit. Your payroll should let you typically do up to 4 accounts. So if your surplus is $1,000, say, you know what, maybe I'm going to automatically save $250 every pay period. So that's $500 a month that now goes to this account. In the first few months, it could just be cash, and that's fine. Just create that habit. It can just be cash, and that's okay. Just create the habit of automatically saving money. And that's it. Those are my call to action. Companies, recruit, make them feel included. Individuals, do your budget. If you have a surplus, put it into an account and automate it right from your paycheck. If you don't have a surplus, talk to Chellis. Or if you don't feel good enough about your big surplus, talk to Chellis. She'll make it bigger.
Yes. And Chellis, how about you? Some call to actions.
So I think my call to actions for businesses would be to change their screening process, and even investors, because if you think about people, I was on Instagram, of course, and I was scrolling, and I saw that this lady who was doing some like vegan cookies, she went through like, I don't know, some crazy number, like 86 investors before she got Jay-Z, the sole investor, to give her some money for her to get her business started. If investors and businesses could stop focusing on skin color and all these different things and do a screening where it's a little bit more fair, we could probably get more people within those businesses and working the system, you know, because a lot of times they say we have to be able to change it from the inside out. Also, I think it would be great if these businesses could be more vocal with what they're doing, because we've learned in general that publicity, all those types of things matter to businesses, you know what I mean? And people also follow suit when they see people making changes. So if big companies continue to, like Google and Apple, show that they're doing this diversity and inclusion, other companies are going to follow suit. It's going to become like a national thing. The same way Amazon is even saying you don't even need a college degree to work here. Things like that start to catch on in the community. So I would just suggest that businesses really take time to broadcast what they're doing for our community and really show that it's coming from the inside. I don't want to hear that you just, you know, gave them a Black Lives Matter day, or that you just gave some money to the organization. I want to see, this is my board of directors, and we made sure that we did a screening process that put the most qualified person in, on top of them being diverse and relatable. And I think for just individuals, just like Bilal said, a budget is so important. And after you do that budget, I would say I think that people get stuck in paralysis when it comes to certain things. You know, we start to do something and then we like, all right, well, I did the budget, you know, I see what I'm doing here. I'm gonna do that investment later. Find out what vehicle is best for you to acquire wealth. So whether if you don't have a 401k or you're looking to get into property, start to do that research today and make a conscious decision of which one you're going to be driving your savings or anything into. So that way you have more, I don't know what the word is. That way you have a better plan and a better strategy to actually execute. We want execution in order to get these things done. So that would be my suggestion, is to really figure out and educate yourself on which vehicle of investment is going to be best for you, because the more you know, the better off you'll be in that arena.
I love it. Well, Chellis, Bilal, this was great. Thank you for joining me on this panel. Really appreciate it. Thank you for the attendees for being here and for listening to us. Really hope that you can take from this, you know, really sustained action for sure, as this day is just calling for. So thank you so much, everyone. Hope you can join the other sessions today. And it's been great. Thank you, Chellis and Bilal again.
Thank you. Thank you. Have a
Thanks
great
for having
day.
us.
Thank
Thank
you.
you. Yes.
Bye.
Bye.
Bye.